What's good, all my trader and investor homies? Welcome to Touchdown Trades, the home of the #1 stock market trading and investing channel on all of YouTube. In today's video, we got a doozy for you. We're going to be breaking down what Jim Cramer said about Cathie Wood and Ark Invest and the people who are investing in the Ark Invest ETFs. Jim Cramer, the host of CNBC's Mad Money, just took some heavy shots fired at Cathie Wood, Ark Invest, the people who are investing in the Ark Invest ETFs, and even Tesla. I think old boy Jim Cramer is losing it as more and more people cut the cord and shift away from getting their news from traditional media sources like his show on CNBC. I think he's realizing that his time is coming to an end. People are cutting the cord, getting their news from alternative sources like Touchdown Trades on YouTube, like straight from the sources on Twitter. CEOs can post information straight to Twitter. Now you can get your information straight from the source and from alternative sources. And that is killing his show, CNBC, and traditional media as a whole. So in today's video, we're going to talk about what he said, and I'm going to offer my take, my reaction on what he said, and kind of break it down and offer my opinion on it. So you're going to want to stay tuned for this one. If you're new to the channel, go ahead and hit that subscribe button, and everybody go down there and like the button. Just start clicking all the buttons. All right, guys, let's break down what salty Jim Cramer said about Cathie Wood and Ark Invest. Let's get it. Before we take a look at what butthurt Jim Cramer said about my girl Cathie Wood and Ark Invest and Tesla stock, check out the link in the description for Webull, where you can get free money for free stocks valued up to $3,700. Also, check out the 2-week free trial. There's a link down there to the 2-week free trial of the private Discord chat, where you can get my buy and sell orders in real time. We've been absolutely crushing it in there. We've caught some huge 100% winners over the last month, 2 or 3 of them. All right, my good old buddy Jim Cramer over here. Look at Jim. Little fashion advice before we hear what Jim said about Cathie Wood. When you're going bald, like you are, Jim, let me draw some hair for him. Do him a favor. When you lose the middle there, you just got to roll with it. Mother Nature's a cruel girl. She really is. But you can't fight her. And when the middle goes, you just chop off the sides as well, and you roll with it. You embrace it. You don't fight it, Jim. You don't fight it with the sides. You got to get rid of the sides. The sides are not doing you any favors, and he's trying to compensate with the little goatee. But it's not working for you, Jim. You got to get rid of the sides. It would do you a big favor. All right, let's hear what Jim Cramer said. Let's roll the tape.
But it doesn't stop at piggybacking. You got a whole contingent of traders who are trying to front-run Ark, as I mentioned earlier. Last week, we learned that Cathie Wood and her team are launching a new ETF focused on space exploration. In response, all the high-profile space stocks soared higher, presumably in the expectation that Ark's new ETF would be a buyer, and they can toss it to the ETF. Virgin Galactic, the extremely early-stage commercial space tourism play, saw its stock jump 20%. But the darn fund doesn't even exist yet. So these trades feel like a recipe for disaster. People come on and they say that people are like frogs that boil because they're buying stocks, whatever. People get nervous when they see a fund with such incredible performance. Barron's piece yesterday made some good points about the law of large numbers. Can't manage $47 billion the same way you manage $3 billion. Then a skeptical Wall Street Journal article just last week, which compared Ark to one of the hottest mutual funds of the dot-com era, Janus. After racking up huge wins on stocks like Cisco and AOL, the Teslas of the 90s, the dot-com bubble burst and Janus's funds got obliterated. But it's good to have historical and to have it in your mind. Well, I don't think Ark is the next Janus. That would be too harsh. I also wouldn't count on them to continue to deliver awe-inspiring returns year after year, especially after publishing what they're buying. She and her team have to keep finding new winners, and it'll be a lot harder to find them and to buy those stocks at reasonable prices because there's so many copycats. And by the way, the people, like you look at Wall Street Bets or Robinhood, they keep taking and taking.
Oh, my goodness. Can you believe dude just said that? He basically said that Cathie Wood will never be able to match what she's done in 2020, that she kind of got lucky, saying that people trying to front-run Cathie Wood are not smart, which I think is silly, by the way. First of all, if you know a big hedge fund or institution is about to buy a stock, they're about to spend $50, $100 million on a stock, why would you not jump in front of them and cut the line? Because the market, after all, is a supply and demand thing, right? If the demand goes up, the price is probably going to go up. The demand decreases, the price is probably going to go down. So when the demand goes up because a big institution like Ark is about to buy a stock, there's probably going to be an increase in the price. That's just common sense. So Jim Cramer's obviously wrong there. And look at this Ark ETF. It's just been a beast, right? Rona lows of about $30. We've seen a 500% increase since Rona lows and a run up to almost $150 per share. So sure, it's obvious that she's not going to be able to put up 100% per year on an annual basis. That's a given. That's a fact. But what Jim Cramer was saying is that he's salty, he's jealous, and he's just really, really butthurt. And why is that? Why is Jim Cramer angry at Cathie Wood? Why is he angry that Cathie Wood, a brilliant investor, has burst on the scene, is offering retail traders, investors, great ETFs? Why is he so upset about that? And I think I have the answer. Let's break it down. Jim Cramer started The Street, which was a news website, a financial stock market news website, about, I guess, a decade ago. And he put a lot of money, time, effort into that website. And in 2019, Jim Cramer was forced to sell The Street. We have the New York Post article that reported this sale pulled up here, and it basically says that Jim Cramer was getting paid too much money, they couldn't afford him anymore, and they had to sell it. So Mad Money will stay with the firm. Under the deal, he's been pulling in a hefty pay package in the $3 million a year range, a painful bite for a financial site that was struggling to find its footing in the viciously competitive market for business news. So basically, The Street was having to compete with alternative media sources like myself, like guys on Twitter, like CEOs posting on Twitter, and you just can't compete with us because that's where media is going. It's going straight to the source. It's going to people like myself, YouTubers, who are really doing this. He's not really doing this. He's just a mouthpiece. He's a good actor. He's a good media talk person, but he's not really in the game. And he's not a good investor, and I'll show you the proof of that in just a second. So Jim Cramer is making a lot of money off CNBC's Mad Money. He made a lot of money off the sale of The Street, although I would guess that he lost money overall in that deal. But he's making the most money, I would imagine, from his Action Alert Plus subscription service, where he charges a monthly fee. Let's see how much he charges. So he charges $30 a month, or about $300 annually, to join his Action Alert Plus newsletter, which is basically a stock picking service. And that would be cool if he was making his subscribers money, but the fact is he's not. He's actually losing his subscribers money versus the S&P 500 index. The Motley Fool, which is another stock market website, posted Cramer's Action Alert Plus results versus the S&P 500 index, and the results are absolutely shocking. So this gray line is the S&P 500 index. The blue line is Jim Cramer's results. Jim Cramer has not even matched the S&P 500. In fact, if you just invested in the S&P 500, you would have almost done 50% better than you would have if you bought in with Jim Cramer's Action Alert Plus newsletter. Straight stupid. So the numbers don't lie. Jim Cramer is not a good stock market investor. Sure, he's an entertaining figure. He's fun to watch, but he doesn't know what he's talking about. And when Cathie Wood burst on the scene with her Ark ETFs and starts posting 100% plus returns, that's got to be a little, I don't know, diminishing for him to see that and have to talk about it when his own ETF, the Action Alert Plus ETF, can't even match the S&P 500. And he took shots at Tesla, and I really don't think he was making a hit on Tesla. I think he was really taking a shot at Tesla because Tesla is the number one holding in the Ark ETF. It makes up about 10% of the Ark ETF. And I think that's why he was taking a shot at Tesla, basically saying, look, Tesla is the biggest holding in the Ark ETF, and when Tesla has a pullback, the Ark ETF is going to roll over. But if we look at the top 10 holdings in the Ark ETF, we can see that they've all been absolutely beasts. They've been monsters. Roku's been a monster. Teladoc, CRISPR, Square has been a beast. Shopify, PayPal, Spotify, Baidu, Zillow. They've all been very, very strong. So, yes, Tesla is the biggest holding, but I think the top 10 or 15 holdings have also done really, really well. The funniest part of the whole video to me was that he compared Tesla to AOL Instant Messenger. AOL Instant Messenger, if you're my age, was like the first text messengers. I chased my first girlfriends around on AOL Instant Messenger, and if you're my age, you probably did the same, trying to get them to send you some naughty pictures or something. And it went out of business, it crashed, it burned because the cell phone, they ended up selling AOL for pennies on the dollar. And it's just a joke, right? AOL Instant Messenger ended up dying. But Tesla, are you kidding me? Comparing it to Tesla, the most innovative, disruptive company that we've seen in decades. Tesla, the company that's taking over EV only has a market share penetration rate of 3% in the US. So they have a 97% upside potential, a growth potential in the overall EV sector. How about solar? Tesla is going to be the beast in the solar industry. Solar is just getting started. How about autonomous driving? How about robo-taxis? Two sectors that Tesla is going to dominate and that are just in their infancy. So for Jim Cramer to even hint at the comparison of Tesla and AOL, what? Is that a joke? So he's basically saying that people are chasing Cathie Wood, they're chasing her investments, and I don't think it's smart to buy just because Cathie Wood is buying. But me personally, when I see that she's buying a stock or they're talking about buying a stock, I'm going to take interest in that stock. I'm going to do my own research. I'm going to do my own due diligence, and I'm going to form my own decision based on that research. But it definitely piques my interest when I see her taking interest in a stock because she's intelligent, she's brilliant. She's probably one of the smartest investing minds out there right now. Definitely smarter investing mind versus Jim Cramer. And the proof is in the numbers. The proof is in the Ark ETF versus the Action Network Alert Plus or whatever he calls it newsletter. So sure, I agree with him that you shouldn't buy just because Cathie Wood is buying. But I don't agree with anything else he said. He also was talking about GameStop, the short squeeze in GameStop, which is outrageous. But you can use those Wall Street bet YOLO traders, the dumb money, if you want to call it dumb money, to your advantage. You know momentum is in the market. Use it to your advantage. You know there's a short squeeze possibility when 30% plus of a stock is sold short and retail traders are coming into the name. So we could have used that to our advantage and bought it. And now we can write it back down when it starts to roll over and it starts to crash. We can short it. There is opportunities to take advantage of the Robinhood Wall Street bet investors in the market, the YOLO traders, but they're not going anywhere. They are not going anywhere. Long gone are the days of having to call a broker up, place a trade or an investment over the phone. Those days are gone. Us retail investors and traders are not going anywhere, and we are not going to be getting our advice from old guys on CNBC Mad Money anymore. And I think that's why Jim Cramer made that video. That's why he's upset. He's going to see his numbers gradually decline, his viewer numbers gradually decline. And I think that trend will continue as people seek alternative media sources. And traders, active traders in the stock market, us retail traders, we're here to stay, and I think that it upsets Jim Cramer, and he's mad that Cathie Wood has burst onto the scene. She's kind of became an icon for investing in growth companies, and me being a growth stock investor, I respect that. I love investing in growth companies, and he's just a salty old man that likes investing in companies that pay him a 2% dividend, and he never sees a return, and that's why he hasn't even matched the S&P 500 over the last 15 years or so. I didn't mean to make this a hit piece on old boy Jim. I'm sorry, Jim. I just had to make the video. I saw what you said about my girl Cathie, and I had to defend her honor. When you got a girl, you got to defend her honor. My boo thing, Cathie Wood, I always got your back. You're my ride or die. I got you, girl. All right, guys, that's going to wrap up this video. Hope you liked it. Hope you got a laugh from it. If you did, hit that subscribe button, the like button, and the notification bell. Check out the links in the description. I'll catch you guys in the next one. Until next time, peace.